Hey there, welcome back to my channel, it's me the Mind Injector. In this video, we are diving into the magical world of the Walt Disney Company and taking a closer look at its recent performance and future prospects. So, grab your popcorn and let's get started. Before we dive into this video guys, I've got some exciting news for you. I want to introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each, plus free premium courses to help you sharpen your investing skills. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up for a Moomoo brokerage account using the link in the description and start earning those free stocks. Now, let's jump into the main content of this video. Disney stock hasn't been soaring like Cinderella's castle lately. While the overall market has been on an exciting rally in the first half of the year, Disney seemed to miss out on the fun. Its stock only rose by less than 3% in the first 6 months. But don't fret, because there's hope on the horizon. Why? Well, it all starts with the return of a familiar face. That's right, the legendary Bob Iger is back in action as Disney's Chief Executive Officer. And let me tell you, Iger has a proven track record of success. During his previous tenure, the company's earnings soared and so did the stock price. So, there's a glimmer of hope that history could repeat itself if Iger's strategy works its magic once again. And he's got until the end of the next year to make it happen. Let's talk about Disney's recent focus on growing its streaming services. The company went all in on this endeavor, resulting in impressive subscriber growth. However, this growth came at a cost. The direct-to-consumer business, which includes streaming, faced increasing losses. By the end of last year, the operating loss had reached a whopping $4 billion. But fear not, because Bob Iger is here to save the day. He wasted no time in cutting costs and reorganizing departments to bring back the focus on creativity. And his efforts are starting to pay off. In the most recent earnings report, the direct-to-consumer business saw its operating loss narrow down to $659 million, thanks to cost cuts and revenue increases. Now, let's address the elephant in the room, Disney's underperforming stock. Despite the positive developments, the market hasn't fully recognized Disney's potential. But here's the big question: should you buy, sell, or hold Disney stock? Well, let's consider a few factors. First, we can't ignore the tough times Disney is facing at the box office. Its most recent release, Indiana Jones and the Dial of Destiny, didn't meet expectations during its premiere weekend. This could be due to various factors, including people preferring to watch movies at home instead of going to theaters. This trend could potentially impact Disney's future releases as well. It's definitely a concern worth keeping in mind. Another challenge on the horizon is the potential vulnerability of Disney's robust parks business if the economy takes a downturn. During times of financial uncertainty, people might be more cautious with their spending, and that could mean cutting back on trips to Disney. But here's the thing: we need to take a long-term view when evaluating a company and its stock. Sure, there may be headwinds in the short term, but let's not forget about Disney's strengths. Its parks, experiences, and products business continue to thrive, with double-digit growth in both revenue and operating income year over year. Disney parks are still the most visited among theme parks worldwide, and that's the testament to their enduring popularity. And let's not overlook Bob Iger's commendable efforts to contain costs and bring Disney Plus to profitability by the end of 2024. That's no small feat, and it speaks to Iger's determination and strategic vision. When we look at Disney's current stock valuation, it seems pretty reasonable. The shares are trading at around 22 times forward earnings estimates, considering all the positive factors we've discussed. So, should you buy, sell, or hold Disney stock? While short-term challenges may cause some turbulence, I'm generally optimistic about Disney's long-term prospects. With its strong business segments, ongoing cost-cutting measures, and the potential for Disney Plus to become profitable, there's a reason to believe that the magic is far from over for this iconic company. But as always, it's important to conduct your own research and consult with a financial advisor before making any investment decisions. And remember, the stock market is a wild ride, so buckle up and stay informed. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.